Yeah. Let's ask about a couple of questions if we can about some terms, because we very rarely get a chance to do this, especially with somebody who does it for a living.
Yeah.
So you talked about reverse stock split. A lot of people might not be familiar with what a reverse stock split is. What is a reverse stock split?
Well, a company that issues, a public company that issues shares may decide to split their shares traditionally. So if they had 1,000 or let's just say 1,000,000 shares outstanding, they split their shares. Now they have 2 million, but at half the price. A reverse split's the other way, where you're splitting down from, you're reducing the amount of shares you have on the market, but making each share worth more. So if you had 1,000,000 shares and you reverse split 2-for-1, now you have 500,000 shares, but each individual share is worth twice that. So it's just a way of either raising the value of the individual share through a reverse split, or creating more shares outstanding to make more shares available to the public markets if you're doing a traditional split. So there's a difference, but it really is what the company is trying to do with its share base. And companies will often split their shares to make more shares available outstanding so that more people can buy in. You saw some of this happening with some of the meme stocks, but then you have companies that will never, ever split, like a Berkshire Hathaway. That's why the stock price for Berkshire Hathaway Class A shares is $260 or whatever, $1,000 a piece.
But what is that? Let's talk about Berkshire Hathaway. Yeah, 200. You got a stock that's almost $300,000 a share. I mean, is that just nostalgic?
Earlier.
It's just like nostalgic Warren Buffett, because in my brain, it's like, what's the upside potential versus the downside risk of a stock that's over $200,000? Like, it kind of doesn't make any sense at this point.
Yeah, but think about who owns that stock and who's been buying that stock for the last 50 or 60 years, right? These are probably not folks who are coming to Investopedia all the time or listening to the pod. Maybe they are, but for them, Berkshire B shares are the retail sort of more available shares, but the Class A shares are worth more because those goes to the executives, those go to the original shareholders, right? And they've built entire equity bases around the fact that they own maybe 10 of these, or maybe there's 100 that have been in their family for a long time. There's the prestige of it all, but they also come, those Class A shares, with more voting rights, for proxy related matters, for corporate governance related matters, and maybe the ability to get in on other deals. So there's a reason that you have these different classes of shares. Typically, the reason that you have these multiple classes, and especially in a company like Berkshire, is to make sure that control is centralized around a couple of people, Warren Buffett and Charlie Munger.
Yeah. As a media company, what were some of the steps that you took to get Investopedia to be the #1 site that most investors go to look for information? And about how long did that take?
Yeah, so I'm not going to take very much credit for that. We've been around for 23 years. I've been with the company almost 6 years. So it's gone through a few hands, but I want to give credit to the 4 guys who started this in Canada way back in 1998, 1999, who said to themselves, we see a lot of these internet stocks popping right now. We see people talking about it. There's this new channel called CNBC that's on cable in the United States. Everyone's using words like EBITDA and profit margins and regression analysis, but nobody knows what these things mean. Why don't we make a dictionary of financial terms? And guess what? There's a company I've heard of down in Mountain View, California, called Google. A couple guys working out of a garage. We're talking 1999 here. These guys are trying to index the internet. So maybe if we put the dictionary online, then maybe these guys in Mountain View in their garage will link to us once they index the internet. And anytime somebody's looking for something, they'll come to us. And we have a pretty cool name. Sounds like encyclopedia. So all the credit in the world goes to them for the idea. They also put test prep there for the Series 63, Series 7. So you could train to become a broker. You could train to work into the financial, to get your way into the financial industry. It went through a few hands after that. About 7-8 years ago, our grandparent company, IAC Interactive Corp, bought us, Investopedia, and decided that they liked having us around and keeping us in the family. And that's kind of when I joined, about 2016 or so. So since then, what we've done is spent a ton of money improving the most popular, but all the content on the site, because a lot of this, guys, was written in 2003, 2004, 2009, 2012. The world changed a lot since then. And the opinion, the attitude, but not only that, the tone in which it was written has also changed in terms of sensitivity, in terms of who we're talking to. The thing we spent a lot of time on in the past couple of years is making sure that we're speaking to all communities, right? We don't want to be talking to the business school kid who's, going to get a job on Wall Street and get one of those cool hedge fund vests and be off to the races. You'll see him on the country club. We want to make sure we're talking to everybody who wants to invest, who wants to learn about money, who wants to learn about taking control of their finance, just like you guys are doing. So they have a chance, because that's just not taught to us in high school or in elementary school. We walk out of college with $36,000 in debt and a job that doesn't pay for it. And how do we get invested at that point? It's too late. So that's what we're trying to do. Open it up, make it relevant to everybody, and make it better every single day.